Good morning. Welcome back, folks. You made it to Thursday, the end of the week. This is where it's time to play. We've had quite the week so far. I think this whole vaccine thing is probably going to be the gist of everything is going to revolve around whatever everyone thinks about this pharmaceutical temporary IP lifting. I've had arguments all last night at dinner. People are arguing right now on Bloomberg and everything else of what exactly is. Again, the question is, if you lift this IP, then on the economic side, what's the point for pharmaceutical companies to continue to create new vaccines? Right. If someone else can go copy if Moderna does all this R&D, and then another company and somewhere else in the world can copy that and make the same vaccine and sell it, then what's the point of Moderna making a vaccine? I think that argument is fucking stupid, first of all. We're in the middle of a pandemic. People are dying. Do whatever you need to do to save people, first of all. So money could be left behind. Second of all, who paid for any of the R&D? Who paid for the manufacturing? Who paid for everything? The fucking governments of the world. Taxpayers. What are we talking about here? What is there's this big argument now that, well, why would they ever want to go do that? Maybe because the only way they're making money is that the government's fucking paying them. When else are they gonna? How else are they gonna get paid to do this stuff? Now there is a side that says, well, what about the pharmaceutical companies that have been around for a long time and they've created patents over all the years? It's fucking silly. It's silly. When we need them, we need them. They will be there. Moderna came out of nowhere because it was an opportune time. That's how it fucking works. Look at J&J. Do you see a difference here? Do you see a difference? Because J&J's been around a long fucking time, right? If that argument was going to held up, then a company that's been around for a very long time would not be doing just fine. Completely fine. When you go look at the difference here, what's the difference? What's the difference? Moderna was just made to create COVID vaccine. The difference here is that the idea that this IP lifting is going to somehow cause pharmaceutical companies not to be profitable or is somehow going to remove incentive. We're talking about the difference in a Nobel Prize winning economist just was on Bloomberg just speaking about 30 minutes ago or so. He professor at Columbia here. He was just talking about the fact that you're going from, even if we talk about like a 10,000% return from one of these pharmaceutical companies, like a 10,000% return, right? Even if it was only a 1,000% return, losing 10 times the amount because of this temporary IP ban, even if it was that much, you would still be incentivized to make a fucking vaccine, right? And to be a pharmaceutical company. You're not okay with a 1,000% return? Where else are you going to get a 1,000% return, right? And it's not even going to be like that. But just looking at the extreme example. So, again, we exited this position as soon as the news came out. I was very obviously long on the Moderna play until that happened yesterday around lunchtime. It's down again another 9% or so. It's a little bit too much now to touch this side. I think the J&J side is very interesting, and so I think the argument of saving lives and that this IP thing doesn't really matter will prevail. It does completely shift the entirety of the idea of passing this high, that somehow this would go beyond here. Whenever you get IPs and shit like that, what does Moderna own? They own the patents, right? They have 200 patents. They own the patents, and that's the only thing that gives them value. So these kind of plays are just gonna fizzle out from here. We'll see if the idea comes back after this argument's played out, and again, it depends on other governments agreeing or not agreeing. But it's pretty fucking insane, I think, because no one knows. This is one of the true surprises we have in the market, which I guess shouldn't be a surprise, because it's like, shouldn't we be saving fucking people instead of going, well, listen, they've got the patents. No one else can make it like that. Sorry. They have the patent for putting vaccines into a vial. Sorry. They have the patent for a needle. You can't use needles to give people vaccines. Like, imagine if it was that ridiculous, and it is. It almost is ridiculous like that. So let's fucking let people do it. So um, we'll watch. We'll watch and see what we'll see what happens with all this, and again, if this is going to cause whether this actually helps with saving people or not, right? We'll find out how quickly some of these companies, how fast they can manufacture. It's still the India problem is still a state problem, right? They've had I was looking at it. They've had the AstraZeneca um, vaccine for months, and they never produced at like a high capacity. It is hard to manufacture, and you need there certainly is sort of a manufacturing um, output problem anyway with a lot of things right now, and so that's one thing. But again, look at what we did as soon as Biden was like, no, we're gonna make more. We just kind of stepped it up, right? We're a little bit different, but we'll see how quickly this happens. If you look at our turnaround rate, we turned pretty quickly to getting people vaccine. Like we talked about the Biden 100 days, 100 million thing. What we did 200 million people in 100 days, right? I don't think it's really that much to fucking ask if you have the ability to just you can see the patent to how to manufacture it. We live in fucking it's 2021, as if you can't copy and paste, right? Let's just be honest. So let's see how this plays out for a long-term macro idea. Jobs numbers came out this morning. People are going back to work, specifically here in New York. Looks like people are finally going back to work. So numbers look good. That's definitely going to continue to divide the value and growth side, right? So if you look at futures this morning, everything is very stable and everything looks very good, but the growth side is a little bit behind the value side still. Jobs numbers doing well is going to continue that because, again, economy coming back is good for value, not so much for growth. The growth side loves when the economy is doing bad right now. That's just where we're at, right? This is where also, well, more people are going to, if COVID's going away, then growth has to go back to the normal, right? We'll see how these things, how these things also change. I mean, it's one thing to see the numbers go to like the pandemic low here this week. We'll see how things look in a month from now, because again, it's not so much the value, or just like when we look at the market, it's sort of the trend that you can set and whether you can continue the pace. We'll see what it looks like the next time we get numbers, right? I'm not so convinced. I'm not so convinced. And again, when you look at the New York numbers, it's not going to happen again probably the next time the numbers come out, because again, we have a whole service industry where there's not, again, the incentive, or there's not much incentive for some of these people to go back. Just the money's not even close to being the same yet. So once everything's lifted for restrictions, then there's gonna be no problem. But we still have people that, like myself, I still need to get my second dose here, right? So it's like maybe soon. Um, looking from yesterday, the Dirty Dow has just, again, it's so far ahead here, an all-time high again yesterday. There's been no volatility. There's been no downside risks. This recent growth move with the tech downside, definitely hurting some people's positions there. This side, if you've just continued with this, not to say that since it's been doing well in the past, it's going to do well in the future, but it kind of does mean that right now. So that's sort of where we're at. We're going to continue to trade through this. In terms of Thursday, Friday here, we're coming out of this consolidation. We just entered the all-time high yesterday. You have to look at this as a breakout. I mean, you have to. Let's see how big this is. And again, we've seen the rotation happen here from tech into value here with that big sell day. A lot of that money hasn't been completely spent with the big energy move yesterday, which was more of it, right? You went from tech selling into significant retail store buying into significant energy buying. Yesterday was just insane, right? Just, again, this number is just, it's hard to like put it into perspective of how, first of all, this doesn't happen, right? Something that's just value oriented, there's not increased revenue or something. There's no fundamental anything, right? We're just in this moment here of still understanding what exactly is happening coming out of the COVID low. And again, this trade has been pretty significant. We're continuing here, Again, if you're buying here, then if you're buying here at the high, you have an understanding that price is going to continue, and value certainly works like that. It's kind of the opposite of growth, where in growth you could be like, well, maybe I'm buying at the high here. I don't really know, and you could get a very sort of negative reaction very quickly, and you're not able to basically get out of the position. On things like energy, banks, when we look at this slower, maybe like industrials, we can compact in there as well. You're going to be able to get out. It's going to be like it's a turtle race here, right? You see the turn coming. It's really quite obvious, and the difference here is that people don't put money in here unless they're going to stick in it. They're going to stay here. This is the value investing, right? This is the long term. This isn't like where you go put money on a growth ticker and then you're like, well, maybe the next few earnings will be good, and I'll get a nice gain here. This is like nothing here is going to change for fucking years. I'm going to just sit here, right? I just think it's strong, and that's what we're at. And so we're just seeing this gain with velocity because of, again, this rotation. We're seeing further rotation, and even if we remove the R word, there's just a lot of fucking cash out there. People need to put the money somewhere. This is the most obvious place still right now, right? When we look at banks and energy, these are the best performing sectors in the market still. Since when January started, right? When the new year started, this was already the best performing sector, even through a pullback, and continues to be the best performing sector. Banks and energy, right? And now we've seen industrials picked up once we started to get fiscal spending, right? Or at least the idea of a package coming out. And so again, this is the most bullish part of the market. Growth is coming out of that consolidation and the breakout still, and we're still trying to figure out what exactly is happening there because of, again, inflation. But we are not stopping here. If you're not in this position, there's nothing wrong with buying here. It's really easy to be like, well, I don't know if I can buy more here. And the same with those of us, also, not even if you're just in it. If you are in this position and you need to take profit on that, because, again, you're getting close to expiration, you can transition it. Every single day, there's an opportunity. You take profit and look to re-enter it, right, with longer-term contracts. Let's say in January, you bought out into April. Now in April, you're taking profit and buying out into June, July, whatever you need to do, right? And you keep pushing the envelope, keep pushing it. But you're still trying to capture a little bit. You're still trying to bet on the speed a little bit, right? And it'll be gaining significantly more than shares, right? That's the point. And so this is still going, okay? Still going. Healthcare has now, we now have this interesting sort of dynamic that removes bios from some of our, let's say, outlook. We're going to stick with our big healthcare companies like Anthem, United, and trade through those ideas. If we can somehow find a timing on bios, we'll do it. But again, let's not waste too much energy looking at those right now, because there's going to need to be arguments done and everything else. And we're going to need to hear some governments talk. So that shouldn't affect the average, though, overall. And when we look here to the end of the week, we have a lot of growth companies. So again, for looking for risky sort of buys here going over the weekend, we have a lot of companies that are down quite a bit, right? We have things like Etsy got blown up here from earnings, right? It's going to be opening 8% lower. We have things like Peloton that got blown up from bad news with treadmills or dumb shit like that. There's a lot of growth tickers out there that are really getting beat up. Like we're talking, they look like they're breaking down, beat up. I think Netflix is probably the best example of something that we have an opportunity to buy. When you look at where price is here to buy at the low, and I've talked about this, that I find it very, very likely that you can. I mean, I think the longer this happens, the higher probability you have that you're going to continue to swing up here. Again, this move has been consistent. There's a lot of different times with all this price action that there was a lot of negative news and a lot of, let's say, reasons why price should break down. It has not done so. This is a kind of area where I can go, okay, do I really think Netflix is going to go away? If price breaks down here, then Netflix is going away. Does anyone really think that's going to happen? No, of course not. That doesn't make any sense, right? It's not going to go away. It's not going anywhere, right? It can at least hold this value in this range, right? And so we can trade it from the low end of the range here to the high. we don't have a true support, but it's this whole zone, right? And so that's why we can use sort of a range understanding, and you can buy in here and feel okay. Now, I did the same thing over here. Again, you get stomped out. This is where if you push that out to 3 months, you can sit in here for ages, right? And as long as you don't have something better to do, and again, this is where if you're fully positioned in the rest of your portfolio, the rest of your cash, you can go take risks like this. I'd be looking for things like Netflix here to go push because, again, this is again, it's within this range and technically trading, and it's getting an idea sort of focus, but it's getting negatively affected by the average as well, and it puts it into position that it may not truly belong in. It may in this moment, but where's it going to be in 2 weeks from now, right? In 2 weeks from now, are we going to think the same thing if the Nasdaq's at the high? These things are going to, again, they're going to sort of transition this chart into what we have seen all the time, right? Which is this sort of consistent back and forth nature, and that's why we trade in these moments where we swing from the low to the high, if we can, right? We definitely can here. So looking for trades like this from today and tomorrow, because again, there's nothing to do with the rest of our value trades. If you didn't I transitioned energy yesterday. I talked about this going towards lunch. Transition those trades, so I have new positions there. I don't really have anything else to buy through value. If you haven't bought them, you definitely should be. But there's nothing much else to do there, so we're going to be hunting. We're going to be fucking hunting here. I had some interesting ideas towards the tail end of yesterday. If you didn't hear those, things like STC here. This got gapped down by 19% because of a cybersecurity thing. This is the exact same thing that happened to Faye. When we took that Faye trade, it gapped down 13%. And a week later, it was up 50%, 60%, right? I'm not saying it's going to happen here, but I'm willing to go take a risk here, even going into earnings as well for extra volatility, and go take this trade and try to swing this up. These kind of trades here, you have cash to go take a risk. This is the kind of thing here that I really want to get a part of because it's a very interesting sort of setup that you don't really know, but you sort of do have a lot of sort of upside and very minimal downside, because when you get something like something that's sort of arbitrary, something like, oh, there's a cybersecurity issue. How do you know how much value it's losing from, like, this lost 19%? How do you know what the value of the company is when a cybersecurity thing just happened? How do you know how much money you're going to lose, right? It's just up in the air. You have no idea what happens there. People panic and sell. Don't you think they're going to sell more because of the panic that comes through and the fear of, I have no idea, let me get out of here? Don't you think that sells more because of that spread? And that this is probably the incorrect price here? It's a lot better chance that the value is up here higher than it is down here, right? And so this is where an event like this, we can trade off it a little bit more. And then that's not a strategy that you can use across the board. News trading off of negative news, absolutely not. But this is again, it depends sort of situation. Looking at something like that, and let's see what happens there. Also, I did this AMC and GoPro trade yesterday. AMC is up almost 3% this morning. This is a buy on the support, swing it up. This is a low end trade. See these again. This swinging down, swinging down, swinging down. What happens after every time? Swings to the upside. This is a very nice trade so far. Again, this is to trade it much further than here. There's also earnings coming, which is going to be a lot of fun. Again, it's not an earnings play. It's for buying at the low end of a range here and trying to swing it up. Earnings adds volatility, which when you take a trade here, you're betting on higher volatility. Well, I have a guaranteed higher volatility event. So that's that. GPro is the same. It's opening at break even, but again, low end of the range here. Sometimes it takes 2 days, 3 days. We'll see what this looks like. It's the same thing. We're looking for trades like this to add risk. So for over the weekend, I'm very excited to see if we get some more opportunities like this. Thursday, Friday, I mean, we'll see which one of these days is going to be sort of our bid day. Whether or not we're going to put the points on here today as opposed to tomorrow, I don't know if it matters, but we're going to use our line right now of the best day to enter was yesterday. So if there's something that we see right here from open or anything today, then we're going to take it today instead of going, well, I'll wait till open tomorrow, right? I'll wait for open and take the weekend trade. No, that's not how we're going to do it. So we see it, we buy it. Otherwise, everything is so bullish right now, right? Even when we look at the mega caps, they're so bullish. It's very bullish. So this is, again, every time there's a pullback, it's so hard to be like, this is just bad. Apple's pretty bearish here. I mean, is it? No, of course not, right? So it's like, what are we gonna do? Every time something pulls back, we're just what else can you do but buy it? There's nothing else to do. And so again, we don't want to be so much. We want to trade through the value side. But if a mega cap is going to pull back, and everyone else is going to take that trade, then we have to try to front run it a little bit, right? There's just it would be a crime not to go take some of the easier trades here. Again, unless you don't have the money to do so and you need to keep it on that slower paced value side, then that's fine. But these kind of setups here, I mean, it's too much not to buy. Now, of course, you had like a day like yesterday, continued to, this candle here, and it didn't really do much, right? But you don't need it to fucking move 5% the next day, right? This is where you take a trade and then you're taking that trade to be in it, not to go get stopped out immediately or to go sell it the next day because you're like, well, you know what? It didn't really move that much today. So, I saw this other ticker that moved 20% off of some news. Maybe I should go buy that, No, that's the point is here is that this company is not going away, okay? It's not going away, right? That's the point. It's not going anywhere. So if it's not going anywhere, then there's only one way it's going to go. It's going to keep consuming, keep buying more, keep making more, right? These things are, that's why we continue to trade through them, right? And it's never going to stop, right? It will never stop. Then that's just where we're at, right? Everything's bullish. Equities are unstoppable, right? Of course, you can say, well, until they're not. Well, when they're not, then we won't be, right? If it stops and we see it, then we'll stop, right? And we'll short it, okay? We're not at the shorting. We're not at the short side, right? We do two things. If there's a consolidation and price breaks out, we go long. If there's a consolidation and price breaks down, we go short. That's it. We don't care what the idea is, whether you like the company or not. It doesn't matter, right? But we're not on that shorts. We're not on the consolidation to the downside right now. We're still on that upside, right? And a lot of that is something like Tesla's going down right now. Is Tesla breaking down here? No, here's the consolidation, right? The market consolidated. If it's above that upper trend line, then that means it's still active in that breakout, right? And so again, we had this whole consolidation, right? We saw all the charts do this move. Then we broke out from the 25th. If you're above this trend line still from that consolidation until there's another major consolidation, then you're still in the breakout and it's active. So even something like Tesla here, right? Now, again, these trades on the EV side just suck right now. I mean, there's no way around it. The EVs and clean energy are not getting any demand. No one's going to bid. Again, it's quite literally the opposite of why the energy trade in the bank trade is doing well, right? It's future growth compared to growth right now, right? You're getting money right now. These are very future outlooks sort of scenarios, things like, again, solar and all these things. Who knows when that shit's actually going to get going? There's trillions of dollars being paid out right now. Of course, that's what's going to get the money, right? To finish it off, before we get going here, semis are again still up in the air. We took this low trade over here. Whether this is going to get, again, stinted on this growth idea, or if it's going to get sort of what my view is that semiconductors are having a really fucking hard time. They can't even make more, right? And it's causing supply problems across the entire world, right? Every company's having a supply shortage of sort of semiconductors. When you look at that, and even having these companies come out, like Intel came out and said it's going to be a couple years of a shortage, does that mean that profits go down for those companies? That's what the price is doing right now. The price on the semiconductor side says, well, there's a shortage. That means people are going to lose profits, and that these are not going to be, you're going to lose price. And even if we remove fundamentals, well, basically, this news is causing a negative downturn, and it's not going to go to the upside because there's a shortage, and it's negatively affecting other companies. My view is it's the complete opposite. There's a shortage in semiconductors, and if there's less supply and the demand is really increasing because no one has them, then I think prices increase, which means what? Prices will increase on the equity side. They're going to increase. And if there's such a shortage, they're still making the same amount as they always made. There's just commodities are increasing in price. Then governments step in, like we already saw, $50 billion from US government. They're going to start to pay for it. They will start to pay. What does that mean? That's direct money from a government to a semiconductor corporation. That's a very nice bump, right? My view of this could be definitely wrong, but I am taking the opposing view on this, and that this price action is just, it's backwards. It's backwards. I understand the negative nature of not being able to produce enough, and that causes a problem, but I don't see how that removes the demand's not going anywhere. These companies still need semiconductors, and the only thing that's going to happen is the prices are going to go up. So, again, I don't really. I understand that their investors are taking money out to go put it into something else right now, right? But that's one thing that shouldn't lead to this whole sell off that we've seen, right? When we compare it just to the average, right? These two things look a little different, right? They look a little different, but it shouldn't be as exact as this. It should not be the same because they're not the same thing. Tech companies and semiconductors are not the same thing right now. They're just not the same thing. So I'm still very bullish on this idea. Maybe it's going to have a rough time, but I think we've got the low there, and that's why I continue to buy on it. Again, they're not guarantees. When you look at these things, like we've already know that Intel and AMD just kind of have always sucked. We only recently started getting good on the Intel trade because of the Dow play through value. Now it's getting sort of, again, pummeled with the growth idea. I'm okay being in here. I'm okay with it. So this is really the wild card, the dark horse sort of play that if, again, it's the idea of wealth creation here. You're buying a lower valued asset, which the market right now thinks that it's a lowered value asset because of this shortage of supply. I'm looking at it as the opposite, right? And so if we take it from a low value to a higher value, that's called profit, right? See what we get here today, folks. Looks like it's gonna be a fun day. Let's get that bid. Again, Dow's at all-time high. S&P is right at the brink of being all-time high. Maybe I shouldn't say brink, but it's right there. Nasdaq's a little lower. We'll see how that some of those larger moves, if we get take profits again. We haven't seen retail stores take profit yet since Monday. The Monday move. Energy yesterday started a little bit of take profit from close, but we'll see if that's going to continue or not. You don't get to guess when the top is on some of those moves, like for what there's going to be a pullback for a couple days or something. So your transition needs to be just sort of, well, I'm going to do it now. That's what I did yesterday. I don't know if it's going to be the top or not, but I'm going to take a profit and go enter the new position on it. Right? Give myself some more legs. What we get here. And also, we're going to be watching volatility, and I've talked about the dollar move and everything else. We're going to be very, very sort of focused on that macro side and whether or not there's going to be moves because of, again, if the rest of the world can make vaccines, they're going to open up. We'll see if money goes to emerging markets, and those things are going to matter because for every day that money's not entering the U.S. equity market because it's going to enter emerging markets, then that's, again, demand we're losing, and we don't want to be a part of a consolidation. We want to be out before the consolidation really gets going. So we'll see if that's going to be something that we find or not. But otherwise, we're at all-time highs. So SBH is up 17%. Good job, guys. Retail stores. Who would have thought? Really makes you wonder sometimes. Really makes you wonder. EVRI, we got that trend line move. That's a dirty move right there. So first of all, SBH, again, some of these retail stores, you're not going to get, I did not get this play, obviously. I did not sit here sideways trading. I took all the trades that were sort of pulled back and then the ones that took momentum. That's okay. But SPX proving the point, again, of course the earnings are going to be fucking great. EVRI was the chart that I just talked about yesterday. We had this big move that led into a trend line yesterday. I talked about sort of the flag nature of this chart. There you go. Just proved it. Now, I did draw the lines in here, but I think I deleted them a couple too many times. But very nice move from yesterday that we watched. What we get here. And we're watching for anything on the consumer side. Anything that has to do with consumer spending is certainly, again, I mean, the most obvious is retail stores that continue to trend, but we're still looking for those opportunities. This thing with, again, what the hell's the name of the actual Anheuser? Yeah, Anheuser-Busch. They did some things with their TO and stuff. We're seeing this whole side of the market do well anyway. We've talked about this, again, consumer spending through transportation, but through the food and beverage thing. I've said this for quite some time now. We continue to do very well on this side. Now, this extra news that we just got on some of these things is very interesting of how it's just, I don't really see some of the point of getting things more bullish, but it's just when you get, again, you're getting an event that causes more volatility and the chart was already going one way. So it's causing more upside, right? And we see this and it's even affecting other things. Again, we've been looking at things like the PEP chart and K, right? These kind of things. They already made most of this move, but look at this move here, right? We just take this K chart. We just took this K trade, right? And then you get this earnings move. It's really easy to be a hindsight Nancy here. We've talked about these ideas well before. There's the earnings here is just confirmation of everything we were trading for before, right? We already know these numbers. We already know. We've known, right? This kind of thing here, again, shows that there are those out there waiting. They're just waiting around, waiting for the numbers to come in. This is great shit right here. I love this. Completely love that. This is... we're still getting this. I don't know if this is so much a game theory idea here, but we got this with retail stores on Monday where we got consumer economic numbers last Wednesday. Everything sold into Friday. We bought on Friday, and then Monday everything gapped up significantly, right, and put a shit ton of points on the consumer spending. This is almost the same thing, I would say. It's pretty close. It's pretty close. Waiting for those numbers is a little silly. It's a little silly, so it's definitely nice we get. I'm happy with that trade. Definitely happy with that trade. W, of course, W. After I say I'm not going to buy it down here, gets that move. I mean, not a very nice probability play right there. So, okay, that's all right. I'll let that one go. Let that one go. Urban continues trade on that trend line. Here. We're going to keep watching, of course, our communication side, whether or not we're actually going to see. I mean, I do think that there's something being priced in here, but we just don't know what it is. I do think we're going to get something, whether that's going to be in the future, sometime in the near term, we'll see. But these continue to do well. Keep pushing that. What can we buy on the sell side? Up, we got this downside move. Obviously, I just posted the chart. We just had this earnings, of course. I really like the bid candle in here, though. In terms of how we buy this here, this 24.38. It is a bit of, I didn't really look at that level too much. We opened underneath the trend line. This is a pretty good spot right there, but you do have a little bit more lows down here. We'll see. I'm going to give that one just a moment. We'll give this one just a moment, but I might pull the trigger right here, very close. The problem is the volume, how it works. I'm going to give that just a moment, and maybe I'll pull the trigger there. I don't like that price action very much. It's pretty technical, though. Definitely pretty technical. Even get this here. I do think this is a breakout, so it's obviously continuing the consolidation here, but you can't ignore this candle. Unless we go, okay, we'll remove the candle and we're still consolidating, then maybe longer. It may not even make a move then, but I would say it's a little contrary to that. Even get that from yesterday's charts. Otherwise, all value. All value. And I mean, look, now you're getting some pharmaceuticals that are not dependent on patents that are doing well. So this is like the J&J thing. It's like, okay, we get this sort of move that it doesn't matter that there's patent things. Very interesting. P&T coming back down. Again, our transportation side's been very bullish. But some of these moves are a little volatile today. Use trading on the trend line here. Quite the lower shadow. Oh, there we go. Back into all-time high on the dirty Dow. Again, if you're not trading through, I'm using the U Dow right now. Told you guys, using U Dow. You can't see the candle there yet, but using U Dow, posted that chart. A little bit more leverage, right? A little bit more leverage. When I mean little, I mean quite a bit. Quite a bit more leverage. But just trading through the Dow here is the place to be doing, or the play to be doing. Goldman, we're doing very well on this so far. Now, again, we've been trading banks for a while, but when we're looking for new opportunities, we talked about this pullback here. Again, you don't know the timing. You could get in and out. You can get in and out of this trade multiple times. This is a very nice move so far. We've gotten BA, where we're still in this sort of, what are we doing here? Consolidation. I like this move so far. That lower low, we've talked a lot about value in these charts continuing to produce higher lows. This is tightening. That's a very bullish candle there so far on BA. Like that candle a lot. Chemicals, again, whatever's happening on the sector, I have no idea, but we're trading through all of them. GPRE as well. See what happens. United continues again. If you're not a part of these, Anthem and United Health, then Jesus, I don't know what you're doing. those have been some of the more silly trades too. Again, continue to look at in hindsight. I will say, those of you that have been here when I've said this move right here, where you get this move like this, we've talked about it as being a confidence boosting move, and we usually see it at the end of a consolidation recently. Maybe I should draw it more like this, but we've been seeing it at the end of a consolidation here, where you get this move like this. This tightening in the last few candles here, three candles or so like this. Sometimes it's 4, where you get this testing. It's like a confidence boosting situation where you get this trading where you have some sort of selling, and it's usually the end of the selling and the consolidation. You attempt to bid, and then you retest this low, and that's the candle that's going to start the break of the consolidation. We've seen this quite a bit when we've looked at consolidations recently coming out. So we'll need to see if that's happening there on the market right now on the growth side, because again we don't really know what the hell's going on with growth specifically, but you know, buying through the mega caps is going to work. LUMN is going. Again, communications, there's a reason why we're looking at these. This is not normal. And a lot of these have been around earnings. This is the kind of shit right here that if you think something's happening, right? And I've talked about this, there's not a right or wrong way to really, you don't know. Usually the thought is to buy the company that's going to be bought, and then the price will push up to the share price that it's going to be bought at. Otherwise, you just kind of get exposure everywhere. We look for openings. Again, I know it's hard for you guys to see this chart because I posted the one chart 2 weeks ago that I reposted. This kind of thing. What is that candle there? Right. What we trade for. X's Looks like it's coming out of that take profit mode. W's. Continuing on gold here. No. Oh boy. Are we doing it? Been talking about this a little bit. Trading through JNUG. Again, super cycle on commodities, but we have not seen it on gold and silver. We've not. Ever since about a month ago, we've been watching, or a little bit more than a month ago, we've been watching this sort of, again, it's not a double bottom, but this move that was coinciding with growth breaking out. We started to take this trade here. And there's sort of an expectation here. We might just get a swing back up to the high here, but again, we're having a super cycle in commodities, and it's kind of strange that the two largest are not moving to the upside. We will see. This price action we're seeing on crypto is interesting as well, obviously. Interesting. Again, whether retail completely stopped trading equities to go trade crypto is, I think we have all agreed that that's definitely happening, but how does that actually affect the crypto market if that's happening? And then how does it affect our trades on the equity side? There's no retail trading. Should be more trending, right? More trend trades. Very stable day so far. What was supposed to be red is still red. And then we have some nice surprises here on some of the green side. TCOM. See these moves? We're in these travel trades. We're in the travel trades. CCL is very close to getting going to be out of here, but you see the service providers like TCOM doing very well right now, and we've usually seen that those lead the move. Now I've talked about, I do like the the trading through the casino side, and then we get this move on win coming with the earnings. Let's see how we do here. Again, we bought the low, so you're gonna have to stop me out. We'll see how this goes. Definitely interesting. And the short-term vol travel is just, you have no idea where the lows, where the highs are, what the move is. But we're gonna keep making the trade. Do we have things turning back over to red? We have some things turning back over. I don't see anything rotating towards the upside in response. Not much here to buy yet on the growth side. Hard to tell. Sticking with mega caps for now. I'm gonna definitely stick with mega caps. Besides some of the larger growth tickers as well that, again, like things like Netflix, like I'm fine with betting on things like that, but stick with this for now. This is a nice move to start. Amazon not moving as much, but I still wonder how much. I mean, I love the candle here. The question is just how fast these things move. How fast do the growth moves come out of this? after that tech selling is like the hardest question because you either buy 3-month options here, you buy a mixture, or you buy just short terms. And the sometimes that difference isn't much. If it's just a trend, then you don't really get much of a difference. But if this is going to snap right back to that high very quickly, then if you do short term calls here, you're talking about like we're talking like five times how much you'd make on sort of longer term options. Right? So some of the risks here, right? Some of the risk here is worth taking, and that's where especially if you're going over the weekend. This move here, I'm not so sure. A lot of the tech selling started because Yellen made a comment about interest rates coming back sooner than later, and then the next day she basically took back the comment. So, you know, kind of sounds like to me we're going to come back. Looks like to me. Well, the take profit starting on G. Like we're going to be able to get some different transitions there. Also, here's a good example of a daylight. So today we've seen some tickers start off very much on the upside. So you get that long bid candle. If those then pull back here, sort of now coming right directly out of the open, you get a very large upper wick, and then it starts to take profit and come back down. Those are definitely the tickers that we want to be buying on because they've shown that there's already buyers at the open, right? If the price comes down, then people are going to be even more so a buyer, right? We want to be buying on those type of moves. So again, anything that's been like at the top of the list here, and then you see the red come in, those are the kind of areas that I'm like, okay, that's what I want to be a part of. Because again, you don't get this large upper wick, and unless there's buyers, right? Unless there's buyers, we have some. We have some that are standout things like XP here that we got this move yesterday. These kind of things do show that there's bid in that market. So also look at this move here on 6. What is that? The direct apex point resistance. What is that? Right. Um, and some of these travel moves are very strange. But I do like the prospects of buying some of these. How do you fucking buy this? And what is this move? Very fucking strange. Choose my French. What is that move there? That's a bullish candle if that holds right there. And it keeps repopulating the data on TradingView as well. Because now it's not at the point. Interesting. No, it is. Very interesting. We're not really seeing this across the whole thing. But maybe we are. See. We'll see if win is still above our entry. These moves are very strange. We got bid yesterday. What are we getting? But TCOM was up. Where's Expedia? Expedia selling here. Very strange. Again, the travel side has been so volatile. But again, you have to take these trades somewhere. And then the question is whether you wait till tomorrow to go put the risk on. We should be using the best data enters yesterday mentality here. This can be a difficult day. I think we're gonna get stopped out a few times on some of these travel plays and some of these sort of related related consumer things because a lot of these are so bullish and we're getting opposites, the complete opposites. I like BA here. If you haven't taken that trade, I like BA right there on that candle. It's very bullish in an intraday sort of way, right? Whether this continues to break out or not, I have no idea. Through the sector, it should be, but it's not clear, right? Not clear. But in terms of consumer spending, we've seen retail stores do well. We've seen food and beverage do well. All of these things are doing well, and then we see travel getting beat up now, right today. And it also got beat up with tech when the tech sell-off started. It doesn't really make sense. I don't think this is really a move here. I don't know if this is like the time to buy it, but some of these are definitely a little strange. Especially when you look at some, like, what does Six Flags have to do with anything here? What does Six Flags have to do with any of, like, when you see something, a small cap like that move with, when we look at some of these larger caps, it doesn't really add up very much. Doesn't really add up. And then you had a thing like TCOM here. This is what makes me, look at this move here. These are complete opposites. There's not even anything here. There's no earnings or something. Wouldn't you bundle all of this together? What's the difference? Who's buying this but selling something else, right? Are you getting capital to go buy Disney here? Which, again, I keep getting fucking stopped out on trying to buy. Well, actually, no, we took profit on this one. And then I got stopped out trying to buy it here. This move was fine. What are you getting capital to buy Disney here? Or something. Airlines. Casinos, I already talked. Like, this move here is just fucking bullish. All right, I'm gonna step up my game a little bit on travel here. We took these trades here, right? We took a lot of the trades through here. These moves have basically dwindled down into basically nothing. Some, you could be in some of them. I took the win trade here at the low here. We've seen some of the others that we've taken, things like Delta on this low here as well. AAL was a little different, so we didn't take that trade. But I'll take things like AAL here. I think I'm going to take Disney here. Take Disney here. I would say in terms of sizing, and that we know this chart is trading on travel, and it's not trading on Disney Plus, which is really cute. I'm going to take some of these here. The timing's not, there is no timing, so I'm going to take those. Well, I'm waiting on this Netflix thing still. That may be, I think for a growth trade, I like that idea there. We're already trading at all mega caps, right? So all the megas I'm already in. But yeah, we're going to get a part of this travel move here. Right here. Do it. Let's do it. Get in there. It may come down a little bit more. I might get stopped out a couple times, but for risk going over the weekend, I think this is the spot. I don't know what any of those moves are because they're not connected, or they're connected in such a way that somebody's getting some money. And when I mean somebody, I mean the market. The market's my best friend. You're my friend. Win, win, win. Win, win, win. Hold us. Hold my hand. Yeah, we're doing very well on a lot of these tickers. I actually I love this move here. You love to see it when you buy something and then the next day it makes a devastating move. Called luck. Calm again. There, you know what's really strange? I mean, it's not strange. Like, earnings should line up with sectors. Is that every single one of these had earnings here yesterday or today on the communication side, besides like the big boys, and they're all making the same move, and it's just so, like, it's so obvious, and it's so frustrating that the prices have not reflected any of this when we've just been talking about it the whole time. It just doesn't make it's so silly to wait for numbers when you already know. And that's why, like, when we when we look at things like T and Verizon and the moves that they've been making, and like Timus yesterday, right? when we look at this move, it's really easy for us to understand that this is going bid, right? And when we look at like Verizon, right? Verizon's a part of the Dow, and it's making a very similar move. But look at the timing here, right? These came out with earnings, and they continued to sell. And so then we took these trades, trying to take them at lows, right? When as soon as we get a bullish enough candle, we start to take these trades. We've continued to push them, but then you've got you've gotten these moves that are just like that, right? Just like that side where you get this earnings and it goes negative. You get this negative earnings, and then you get something like Timus here, and it pops back up, and it's now continuing the same thing that all communications are doing. And now when we look at all of these other things that we consider this sector to be a part of, they're all making the same fucking move, right? But some of them are just on different. Look at the timeline here of how these things are working, right? And so now today we're getting all these moves that are they're buying from the data. It's just it's so silly. It's literally so fucking silly, right? I mean, I don't know if that makes sense, but we sold on earnings that were great. And so then Verizon T, they start to trade to the upside a few days later, just like we saw in retail stores, right? Retail stores are selling off of economic data, and then the earnings come in and then they go bid. And then it's the same here, right? This is the opposite of what happened before, but it's the same result, right? We already knew coming into these that these were going to be good. And so we were trading through this sector. It's just, it shows that this does not matter. It's just it's sort of a confirmation of the same thing. It's a confirmation of the same thing. These earnings were all the same. For communications, they're all the same, but these sold on them. But now that we're 2 weeks now ahead, we know that it's good. So we're trading bullish on it instead, which is silly. Kind of trades coming back down to the lows. Do it. Those come out to him. What do we get going on this? Huh? Retail stores continuing as well. Love the BRKB move. Oh god. It's nice that we're in the channel now because it's so much easier just to see it visually. The pace we're on. We've been on the same pace, but it's caught back up. Caught back up. I think my last one we led to here. I've had the same length on my targets. Same with the other chart. Wonder when it's a good time to take profit on this, to transition it. Wonder if today's a good day. These can't, you know what? Today's probably a good day to do this transition on BRKB when I think about it. The gaps we're getting in price. Again, when I take profit here, it's to re-enter on longer contracts because I'm getting towards the point where I'm pushing too far into the expiration. The gaps here it's probably enough of a reason. And it's now into the channel. Doji'd here to start the day. This has been a great fucking trade. This is a great trade. Okay, I'm gonna transition this one. I'm gonna take profit, and then my re-entry, it may be today, it may be tomorrow. It's like energy right now is still up in the air, but it's probably gonna be today or tomorrow. Some of them already got re-entered because there was a big enough move yesterday. And transition is still going long. But I get to take the money home. It's probably a good time. It's been very strange as well. See, some of these charts are not moving with their sector. And these are the hard ones to read. This whole sector's been just trending towards the upside. On the Fizz chart. Don't know if I can buy that. Wait. WB. Don't like this GE. Okay, hold on though. Are we gonna get this? Whoops. We're getting this lower trend line on GE that I put in yesterday. If that breaks, then that's not good. But it looks like it's gonna hold there. That's a great spot to buy if you haven't taken that low trend line through here. We've looked at that. It's a very nice trend line. And we've seen this across the whole market. On this value side, it's this trend line that things swing off of. Look at these moves that we get off of this trend line. This might be a good start. Might be a good sort of viewpoint that we can look at in terms of some of this aerospace and defense stuff. It looks like it's actually coming off pretty strongly, like a bounce. That's quite the bounce. I know you. What is this? Where? There it is. Jesus Christ! What was that? It was opposite. That's quite the bounce right there. That's quite the bounce. And we've seen this on a lot of tickers recently. That's a great fucking bounce. If that's gonna come off there, that might be the start to this sector that we've been looking at. And again, when we look at all these things, it's hard to find the exact trend line on some of the others, but it's the same concept. It's the same concept through here. It's not as pretty when we look at some of these others. It's the same concept. And it's again the market trend line. It's the market trend line, the velocity that price usually trades on, but it's just this lows and the higher lows. And we've seen this across, I think, again, just to use X as an example, this lower trend line here, look at every time it touches down here, fucking swings up 30%, right? And every time we get up there, we take profit and look to do it again. The X trade coming into support here is the next, again, this is the next opportunity here. Right now, we're not waiting until tomorrow. Usually we wait till open to go buy this. You buy it right there. Look at that tick right there. That's called buy me daddy, right? If we had a daddy emote, I think we do, but some of these are, that's your moment, right? That's your moment. That's your Friday trade on X. That is happening today instead of tomorrow. Because again, we're a day ahead. Now, again, I'm talking as in it's 10:05 right now. Things may be different in 30 minutes from now, but that's not how we trade. We don't get to guess what's going to happen in 30 minutes. I mean, some of the price action is very strange. It's hard for me to read. So some of the stuff today, like when we look at travel, I can't really read what's happening. Some of it's tightening. Some of it's like, I think this is all good for upside. It's just very strange looking. Some of it's very strange looking. This is the confidence. This is literally what I'm talking about. Is we get this move like this, right? We're doing this a lot, but this is extreme. Like this is extreme price movement. Some of it doesn't do anything. Look at this. It's the same idea here. This is just tightening though. This is easy to read. We go. This is bullish. This right here is bullish. It's probably going to break out from here. But it's not moving like these other the rest of the sectors are. Look at these charts, right? All the economic numbers, great. Consumer spending, great. All this, right? Food and beverages, great. Transportation, UPS, spending, like these are all great. These are all value things, right? Wow, so those lines are real. Real lines only. Why, you guys don't see those lines on your Robinhood? You don't get that line on Robinhood? Could you even draw lines on Robinhood? Wait, does Robinhood even have charts? Like, that you can look at? Just line charts. Just imagine, imagine only looking at line charts. Look at the difference. Imagine trying to fucking chart line charts and you're like, yeah, see, this is a technical move right here. See, if you connect the highs on the line chart, look at the difference. It's so crazy to me that there have been times in history when people used line charts instead of bar, like then everyone switched to bar charts, right? And now we created candle charts to make it a little bit easier to read because it's hard on today's screens. It used to be fine. Bar charts were good on the old resolution screens. This is the actual story. The story is that the old screens that we had, like the old Bloomberg units, they used bar charts because visually it worked, right? The way that there was less pixels, the less pixels made this look very good. But like on my screen here, right? I got a 4K screen here. It's fucking almost impossible to see these right now. It's very hard for me to see these. And so what we did was we created candles. It's the same thing, but we created candles so that you can actually fucking see it with your eyeballs. You don't have to, you know, squint your eyes too much. True story. What do we get here? Very spicy day so far. Very spicy day so far. A lot of, again, the value side looking very good, but the timing on everything else is very difficult. Very difficult. We have a lot of green, so again, you have to trade through this shit. You have to trade through. You literally have to trade through this stuff first, or you might as well take the gun out and Russian roulette this day, right? Today should not be, no day should be Russian roulette. If you're only trying to trade growth, you're doing that. You're definitely doing that. But it's fun. I love this kind of shit because it's really not it's really not straightforward. Like, what is this move? This is bullish though, right? This comes down here. You're like, we've already done it. We already did it. If we get too much of a negative move, we'll be patient, but I love these candles in here. Win is going to get pretty close to our entry point, but I'm going to retake these trades. I am going to be consistent on these. I'm going to retake these trades. If you look, again, this shit, it's complete opposite. Look at this, right? Retail stores continue. They also showed us some of this volatility, right? You get the big retail store move and you get this volatility here. I'm removing the rest of those candles there because as soon as economic data came in, this is the move, right? Very different moves. There's a reason why these charts are doing well. Again, just consumer spending, inflation. Why are we seeing differences on some of the sectors when they're the same thing, right? Shouldn't be. You quite literally shouldn't be. There's rotations going on in terms of where assets or where capital is being allocated right now. And by the way, this is now let's see. This is fucking very interesting. This is very interesting. Read. Hold on, hold on. How about something like the IBM move here? IBM just got, if anyone's, there's some like IBM news about them acquiring companies. The more companies you acquire, the more debt you take on, which is why AT&T looks the way it does, right? Every time you acquire companies, you're acquiring more debt, and you just kind of, you do nothing forever. You trade flat, you swing, sure, but you've basically traded flat forever. IBM got a downgrade. You know what downgrades mean, right? Price goes up. So, um, in terms of debt, I wonder, that just made me think a little bit about debt. How much how much are we pricing in debt on travel? I haven't really thought of this question, but there right now, the whole travel industry has a ton of debt from what happened during COVID. How much are we pricing debt here? And are there moves being, are we having price volatility because we're understanding the debt a little bit more, which we are. We're actually understanding it a little bit more recently. I haven't thought about this, but I wonder how much of this is actually moving based on debt. We've seen that sometimes, as soon as there's an announcement that debt's being paid, there's no movement. Sometimes we have, so that's not like a consistent way to look at it. Again, that shit doesn't really matter. This is very, very interesting. Everything else is holding very good. Again, it's a very stable day. Today's such a stable day, it's so interesting to look at it. On the average, very stable. Dow's still technically green on the day, but we did push further into the high here, which is definitely, that's all you need to see. Most likely we get back up there. I would say most likely, based on what we saw so far. And again, it comes down to whether, I guess for this side, it does come down to whether energy, how much it takes profit after that big day. Depends on if how long this sits here, right? Of course, this is where, when I said it yesterday, even the idea of transitioning here is a market wide. Look at how market wide it is, right? Everyone's going, okay, time to take some of that profit here, and then they're transitioning it, right? It's the same. Again, it's not like it's random. Of course, the whole market thinks basically the same way, and so everyone's going, okay, let me take some of that profit, and then how much of it depends on how much here that average gets affected, right? When you look at things like CVX, XOM, right? Your big boy companies here, that's going to actually affect things. I guess we can also think about, we are doing this commodities pricing into equities through the increase in prices. We could say that since oil is showing that it's going to continue to climb, that can affect equity prices, but that should be positive, but we are getting a negative reaction, just like in semis. The cost for the minerals of semis are going up, so it's causing there to be a shortage, and speculation is showing that they think that actually decreases equity prices. If we use this, like, think of airlines, we've talked, there's like the idea of when jet fuel goes up, it causes the prices of airline tickets to go up, which causes the quantity of demand to go down, which can cause lower profits. Again, very fundamental ideas, but we're trading on such a macro sort of understanding on some of these things right now because of inflation. These things are fucking backwards. They're just backwards. So we're very much just in the motion right now of when we look at it. For instance, if you wanted to say that, let me say, that travel is consolidating over here again because the prices of the costs are going up, and that's going to cause the quantity of demand to go down. Well, it's like, well, COVID's already fucking happening, and we're going to come out of COVID. And the reason why you're down here is because of COVID. So is it really the costs are pushing this down faster than getting out of COVID is. Like, you came down because of COVID, and then the cost started to go up. So now it's coming back down. Isn't the demand coming in faster than the increase of the commodity prices, like for gas prices, right? Nah, some of this is, even if you try to, like, I'm trying to go far to find ideas of why you'd price things a certain way. Can't really find them. So I'm gonna stick with the technical reasons to be buying. And again, that's like an example of IBM here. IBM taking on more debt. Oh, good, price goes up. Because who cares? Whoops. We continue to gain on consumer spending. Anything tied to commodities still getting gained. We're also missing quite a bit of flow right now. Volume. Dollar increased a little bit. What do I want to look at here? Let me switch over here. Over here, 2 years doing its thing again. I already saw earlier. Selling 2-year. The market keeps selling 2-year. You're giving up guaranteed money over 2 years. I think yields are gonna go down. Or you don't think you're gonna be able to sell for a higher amount. You're selling short term to go into long. Term to long. Short term to long. Okay, so we see that the bond market and equity market have not been correlated for a while. We've seen over the last 2 weeks or so very obvious rotations, and also this week it really has picked up on rotations, selling tech to go into value. We've seen comments be made on interest rates and inflation causing volatility. We've seen this 2-year spike continue to lead into price action, showing sensitivity there. But the big thing here is rotation. People are changing up their portfolio. They're adding on different sectors to their portfolio, same way that we're trying to. In the most common portfolio is a 60-40 portfolio. 60% equities, 40% bonds, but they're not correlated. 60-40 doesn't work if the bond market and equity market are not correlated, because then it doesn't make sense that you're hedging your 60% equity by 40% bonds if they're not correlated. It's like saying, well, I'm going to hedge my SPY position by buying a Top Shot deck. They're not correlated. It doesn't work. Doesn't make any sense. You're going to buy, you know, It's just not correlated. So right now we have rotations. So you're getting this. This seems to be what we're doing is we're getting full sending the portfolio sort of strategy. We're removing 60/40 still. We've been selling bonds for a long time, right? We've been selling bonds for quite some time, and it's been more going into equities. But now what are you doing? How are people restructuring? I think we're finding out. I think we're finding out a little bit here. And you've seen there's been a lot of this. There's been a lot of talks about what's the best portfolio to have for, for these big funds. And again, basically every pension in the world uses 60/40, but it's changed since COVID, and they've been trying to figure out what exactly is the best way to do it. We've seen what's been successful, and again, the longer term ideas on value have shown a lot, and so that's why we've seen such consistent trends, because we continue to get those orders put in. A good example again is the healthcare. It's the same orders every day, and that's just pensions putting it in, putting it in. Some of the moves here do look like we're getting some more. Does look like we're getting some more. Some of the moves that, when we look at it, it doesn't even look like people are trading. I would say that's this portfolio rotation in terms of strategy, changing the strategy. Because again, we're not having any correlation between bond markets, equity markets. What are people switching to is the question. What strategy are portfolios switching to? How do you structure? Less in bonds, obviously. So where does the other money go? In the equities or elsewhere? We're seeing a lot of, again, we're fully positioned on value, and we're seeing most of it go there, but how do you position the rest of it when you're doing things like you're selling? Again, what's happening is you're selling volatility. These moves on travel, for instance, if we just let me use like the Jets ETF or something. This selling here is selling volatility, because you're buying long consumer spending. You're going long on consumer spending, obviously, but then you're selling travel, which means you're selling volatility, because this is a short-term it's very much short-term volatile. And so you're not willing to hold it through that short-term volatility. So then that would mean portfolios right now, they're much more active. They're much more active, and they're willing to sell what's volatile for what's not. So that would mean that portfolios right now, and we've seen this over months and months now. But again, to see it again today, again, it's like another day that I'm seeing the same thing. That would mean portfolios right now are removing themselves from the volatility equation, just like we've seen the spot VIX do, right? Where it's so low here. We're getting an increase here because we're getting rotations again. And every time we've seen rotations, we get volatility. And that's the only time volatility goes up. That's it. And so this does give us more information that there are these moves happening specifically just in the equity market. That would mean equity rotation, not rotation from bonds to equities. There's no inflow, outflow. It's just one thing to another. So we can use that information for some understanding that to go buy some of these things, it needs to be a removal of volatility. There needs to be less volatility. This is where we can actually maybe use some of the IVs and understand that this volatility is too high. We're not going to get buying here. They're not going to buy on the high volatility. It's too high. And so that does slow down timing. It does slow down timing. And a good example would be this. Energy, we had just sort of a one-way street, and then we started getting volatile. There was a lot of volatility coming in. And then once it started to go away, when we started getting supply started to sort of get digested, and we understood what exactly the demand was going to be, OPEC meetings happened, then energy just started to climb on a normal trend, went into portfolios, people going long on it, slow and steady. Banks, slow and steady, no surprises, no volatility. Anything that has to do with, oh God, what if interest rates go up? Those are what's moving, that's volatile. So it's hard to go put money in there. Probably a bunch of money's gonna get thrown into REITs. Mm-hmm. Gonna be ETF. I think using shit like this is a leverage chart. And there's no volatility. There's no volatility on this chart. I mean, it's the Dow. Obviously, the Dow's been pretty straightforward, but there's no reason to do anything else besides trade this shit. This is a leverage chart. This is the Ultra Pro Dow, and there's been zero volatility on it, which is the exact opposite of how leverage charts work. Which means that pensions are just like very much flowing to ETFs, I would think. And that does explain why we've done very well on some of these things, is that we're getting this we're getting to a point where there's just this consistent buying at highs, and I think maybe some of the buyback stuff can confirm some of that. But I wonder how much of that has to do with this communication thing. Hold on. I got it, boys. I got it. The dirty D word. It's the dirty D word. We were right all along. Hold on. Hold on. Give me a second. All right. Here's what's happening. Here's what's happening. Okay. COVID happens. Bonds get fucking smacked. Your 60-40 portfolio gets blown up. Equities go just kaboom, right? Equity market crashes. The bond market, which is your 40% hedge, does not help you. It actually hurts you more. So both are not correlated, or they're not negatively correlated in such a way that it's a hedge. You actually get fucked both ways. You got DP'd. So, coming out of COVID, we start to change up the rules a little bit. People are trying to find ways to trade out of COVID, buying growth, because growth did very well, right? As we're starting to buy more, right? We're starting to buy growth, COVID winners, things that are going to do well. These are obvious ideas, right? They're going to do well during a pandemic. Coming out of the pandemic, the election starts. The election shows that we're going to be basically unlimited spending. Now, again, the Fed discussions have already happened. 120 billion is happening. We know that all the Fed is going to support the whole market anyway, right? But then we get confirmation from the November election and the Georgia runoff on January 6th that they're going to be an ass load of fiscal spending, right? We get stimulus, we're getting infrastructure, right? All these things, which basically now, again, in conjunction with the Fed removing volatility from the equity market and throwing it into the bond market, which is what they're doing, we've talked about, and with the spending, which directly benefits the economy, and then, again, directly benefits the companies that are in the equity market, that are public. So you have this, everything is basically supporting the equity market. And even though the bond market is being provided liquidity, it's causing volatility there, which does not guarantee the yields that you're getting, because, again, you buy bonds because they're consistent. You are not being consistent if there's inflation. You go buy a 10-year bond, and then inflation is going past 2%, you're no longer gaining what you bought it for 5 years ago. You're now losing. That's called the real rates, and the real rates are negative, right? But you're buying them because you think that maybe it'll change, but it's not if there's inflation. And so what is happening? A few months ago, I mentioned this idea that because there's so much bond selling, bond yields are going up higher than the dividend yields. Right now, yields are higher than dividend yields. You can get a higher yield on a bond than dividends. The equity market's riskier, though, right? The equity market's riskier. You should be getting a higher yield from those than from bonds. Bonds are safer, money guaranteed by the government. What's the difference? The difference is the equity market's getting supported, unlimited spending, the Fed is there, and there's inflation, which directly appreciates companies. Now, it is specific to a side. It's through more of a value side, the less volatile, and those big boy blue chips that are providing dividends, and the companies that are most likely to offer new dividends or increase their dividend. Why is this important? Because there's a difference between, again, having like $1 million and then $10 billion to go put into something. Dividends pay a fuck ton to institutions. They don't give us anything. You and I, we go put money in, buy shares and get a dividend. It gives us like pennies, right? Doesn't do anything for us. But if you get a lot of money in something, it pays a lot. And right now, it technically is paying less than buying bonds, right? Yields right now are higher on the bond market. What's the difference, though? Is that when you look, you're getting paid less of a dividend, maybe in terms of a monthly yield or a yearly yield. But the difference is that that underlying is appreciating faster because of inflation, and it's faster than inflation, and it's going to increase faster than the bond market, and it's a guaranteed factor that it's going to. And so you're betting on equities, but you're getting the dividend yield on your money, and it's almost guaranteed in a lot of different ways. And it will be if everyone does it. and all portfolios are switching. So if you remove the 40% bond and you put the 40% into dividend yielding tickers, and if you maybe take some of that 40% and bet it on those tickers that you think will offer dividends or increase their dividends, and you use that as your risk buying, then you can transfer some of the 60 to some of the lower volatile, right, tickers that may or may not offer dividends, but you can basically repackage the way you're buying equities. You're using dividends as your bond. You're using it in such a way that it offers this return, but you're doing it because you know that this shit is going to continue to basically appreciate, whereas in the bond market they're technically going down. You're getting paid you're getting paid, yes, but you're getting negative rates. Like, you're getting a negative yield. And it's going to continue to go down as inflation goes down. This is the opposite. So what's happening? You're hedging. You're not technically hedging, but it's more fucking correlated than the bond market is, that's for sure. You're much more correlated if instead of buying the bond market, you can buy, again, those tickers that are going to do the opposite to, again, we see value and growth. Your 40% goes into value. That is more directly correlated with the other side, like we've seen, because growth does well during the pandemic, value didn't, but now value is doing well while growth's not. Those are negatively correlated. Every time the market sells off tech, value goes up. Isn't that a better hedge than buying bonds when bonds fucking tank too, right? The bonds crash as soon as when tech is crashing. Those are not very good hedges. People are buying fucking dividend stocks right now and betting on which ones are going to be. It's literally what's happening. It's quite literally what's happening, and what makes this T move so fucking funny, right? This chart is terrible. This is terrible, and we've talked about the dividend thing, and it doesn't matter if you're getting paid a dividend. It's terrible. It's literally terrible, right? You're not getting paid a dividend here, and you certainly were not, right? You definitely were not for fucking ever, right? You weren't even through here, right? What's the difference over here? The difference is that there's becoming a change. There's a change happening in the market, right? So all through here, you should never have touched T. Never touched it. Absolutely never. Never touch it. Right now, though, there's a shift in portfolios happening, and it's a public thing. Public thing. What are you getting here if you're buying T? Okay, you have an idea of a dividend, right? And so no matter what, if this just traded flat, you're still going to get a dividend. Okay. It's a little bit less than bonds, so you probably wouldn't do it. What's the difference, though? Now is that you don't just have a dividend, you have this. Right? You have this. Trading with inflation. Appreciation due to inflation. That's the difference. And if you look across the whole board, dividend, you need the equity market to go up on its average to get to have the dividend be worth it. But if you know that there's economic events and fiscal policies, monetary policies that are directly going to appreciate you for everything, you're getting both. And it acts as a hedge because you're either going to get the dividend and not the appreciation due to inflation, or you get both. And so it works as a hedge on itself. Look at this chart. We looked at this chart months and months ago when yields finally crossed the 1% yield on the 10-year. And I talked about, well, now the 10-year has a higher yield than the S&P dividend fund. So why would you want to be a part of it? We're being shown exactly what's happening. We're being shown exactly what's happening. I didn't really think about it too much when the dividend fund right here, this went past the all-time high in February. I didn't really think about it that much. This coming beyond that high is showing a completely fundamental shift of portfolios. They're not buying bonds, they're buying fucking dividends. Let me show you why. You're getting a bank dividend. Remember when I talked about banks putting their dividends back on and possibly changing their dividends and all these things? And we've seen volatility comes into this market when there's a possibility that could be a removal of a dividend or something like that. As soon as you get good news, it's good. There's no problems with dividends or anything here with banks at all. You're getting paid a bank dividend, which is obviously why banks invest in themselves and everything else. You get dividends and why institutions buy things that have dividends, obviously. But it's value. Value doesn't move very fast, right? But value does well during inflation, right? And so you're quite literally getting the best of both worlds here, because there's two sides to the bank play. One is that it's value and you get a dividend. The other, and I guess what's coupled with that again is inflation. But the other thing here is that there's this big risk event around interest rates. And if interest rates go up, this fucking skyrockets. This turns into a rally. If interest rates go up, banks overnight become basically, you know, the kingpins of everything, because again now they're in a position where, again, low interest rates are not good for banks. High interest rates are great for banks. These are all feedback loops. The more money that gets put in here is directly what causes that to happen. And so again, you're getting hedged through one moment, and then if interest rates do go up, you're now switching it, because now growth will come down and value will go up. So these things are all, again, if you put your money into this idea, you are hedging yourself because of, again, this fiscal support that you're getting in the monetary policy that's going out that's directly benefiting this. You're basically going to have a Fed that owns the whole fucking bond market anyway, so get ahead of it. Get ahead of it and trade accordingly for it. And you're fucking seeing it. That's literally what's happening. That 40% is coming into dividend stocks. It's coming into dividend stocks. There's a lot of cash out there that still has not hit the market. We're talking, again, the equity market's a $30 trillion market. Treasury market's a $20 trillion market. That $20 trillion has not all exited the bond market, right? We've seen some of it. We saw $1 trillion go to cash, and that $1 trillion is still basically cash. The equity market has been rallying and doing very well, but when we're seeing, again, this disconnected sort of, the equity market is, look at the difference every single day, where we have these tickers that are doing extremely well. Consumer spending is doing well right now. And then the direct opposite of that is not doing well. You can hedge yourself with the equity market. The equity market's not going to fucking crash. It's different this time, right? I've been saying it. It's different this time. And I think we're seeing it, actually. Every time this happens, this rotation, it's not money exiting the equity market. It's flipping. It's switching. It's switching to the other side so that you can continue to be hedged against yourself with the same fucking asset, the same asset class. You keep rotating it one way or the other, turning the dial. Oh, I want hot water, cold water. But you're still in the fucking shower, aren't you? You dirty little bastard. And that's why the Dow is the goddamn best one. Why? Because the Dow has exposure to value and growth. The Dow is the perfect beast. It provides the dividend. Every single one of those provides dividends. It gives you exposure to value. It gives you exposure to growth, which, if we use this idea and if everyone agreed on it, the difference is that you would need everyone to agree. All portfolios would need to be set up the same. Right now, most of them are 60-40. 60 stocks, 40 bonds. But if everyone switches to a much higher number on the equities and you use equities to hedge themselves, then the idea of the Dow is that you're hedging value with growth and hedging growth with value, but you get to be in both at the same time, and you don't have to hedge your equities. Because if you're not worried about equities coming down, then you don't need to hedge equities going down. You just need to hedge growth or value with each other. But there's a way that you're hedging both of those with dividends. That's the point. And these things flow with each other, and all you need is the continued flow. And you have that guaranteed by inflation, appreciation, and Fed increasing money supply. And by, again, this consistency sort of idea of if everyone's doing it, then it's going to continue. There's nothing to really sell on here. Think about it. If we get another pandemic right now, or we had some other global crisis, what would happen? What would happen to some of these? What would happen this time? If, you look at this compared to sort of the crash here from the pandemic hits. What if it happened again right now? Would you get a different virus? Would we come down this much? Would this even happen? Right? We had this move because it was a surprise. No one was ready for a pandemic, and we had no fucking idea of how to even. we had no idea of how long things would be closed, or now we could get a new event that's random, and you have no idea, right? You have no idea what it is. What's the difference? We already have all the support systems in place. Monetary policy, the Fed can start QE instantly. As soon as the market started to crash, they could quite literally buy all of it. They're willing to spend any amount. On the fiscal side, on the federal government, right, our elected officials, they're willing to just send out money fucking instantly. And they know how to do it now. This is the first time we've ever done that. No one has ever been sent out paychecks like that. The first time. PPP loans, whatever it is we need to do for corporations. On the private side, because the public side, again, the public side is completely guaranteed by the Fed. Bond market's completely guaranteed by the Fed. Real estate's completely guaranteed through whatever MBS we need to buy, right? We actually have everything in place, and this is where the idea of infinite QE comes in. Like, are we just going to continue to spend forever? I think so. I think we just continue to spend. And I think the market's pricing that. The idea of that theory has become more and more intertwined, and this is where we talk about the Fed becoming more political. The reason why it's being called more political is because we think of progressive ideas as being political, but it's really just taking care of fucking society and the economy. It's a 21st century economy. It's an economy where if you want things to grow, you need to support everybody, and everyone needs to be growing together, not where just the top and those that are successful continue to gain on the system. You need everything to grow together. And if you are supporting the baseline of everything right now, that increases spending, increases everything together, and we continue to grow. And again, you have funding on everything. You have spending on education, R&D for pharmaceuticals, all these things, right? That's because we're continuing to just increase the money supply infinitely and support anything that needs to happen. Removing volatility from the equation, throwing it onto something that can be handled. The Fed quite literally sucking volatility from the equity market, throwing it into the bond market because they own the bond market. It's all on the bank sheet. It's like playing Monopoly. Are you ever worried about running out of money when you play Monopoly? No. No problem. Go to the bank. Bank got more. Oh, you got no more paper money? Just write it on a piece of paper. No big deal. You're never going to run out. You're going to be able to always... We know that we live in that society right now. We know. And that's why the equity market is the way it is. And we've called it crazy and this is different. It looks like right now we're in the midst of some portfolio changes. And it's been all over the fucking... We've had articles every day of some of these ideas. And it's kind of, we've seen it kind of differ. And we've seen the bond market do its thing. And we're getting politicians talking about these ideas. We have Powell talking like a politician. We have people like Yellen come out and say a comment, and then she goes, "Oh, I'm sorry. No worries." Seems like we're playing the game. And this right here is like again, this is sort of the apex idea, is that you get value and growth, and then the dividend, and you've got everything you need. You don't need a fucking bond. The bonds are the tool that the Fed uses to support the equity market. And the fiscal spending is a way to support the people. Kind of got everything here together, don't we? Looks like it. It looks like it. I think we're buying fucking dividends, boys. What is the next company that's going to become a dividend company? What's the next one? What's the next one? And you have buybacks, and people are willing to. Oh my god, boys! I've been talking about this the whole time, but I didn't realize that's what I was saying the whole time. I mean, everyone knows that buybacks are basically dividends, but I didn't realize what I was saying when I was saying it the whole time. Boys, buybacks are dividends. Okay, buybacks are dividends. When a company buys back, it's increasing your position instantaneously. It's a dividend, increasing your profit. Every company can buy back. What companies are more likely to buy back? Boys, we got it. Fuck me. Hmm. By the way, this transition's working pretty well so far. Hindsight Nancy here. When we re-enter this, maybe it's tomorrow, but I think. Oh, um. By the way, this is so silly looking. Like some of the retail stores are really silly looking, and I just don't know how much. Some of the small cap ones are just. I mean, it's impossible to tell how much is there. But it's definitely funny to look at. Fuck. Oh god. And we're in all mega caps. These are great spots if you haven't taken these. Like, we're look at the Amazon chart. It's really hard to look at this and not think that this is not going to swing up from here. Um, fuck. Um, let's see. Aw, Jesus. think we're right, boys. Oh, I think REITs are gonna go up. Ugh. 30 minutes later. But it's so out of nowhere. Why are things changing like right at the moment as I'm thinking about them and talking about them, the ideas. You see the price action and it looks like there's rotations happening, and then now, you know, looking at why you see some of the more volatile stocks take profit. What's the most defensive sector? REITs. REITs are the most defensive, and they have no volatility. They have had volatility most recently because of COVID, but they're the most defensive and they don't move at all. You think REITs are going to go up probably because of that. If you look at that through that idea, and now we see REITs are putting moves on in like very obvious. Yeah, look at something like this chart right now. I'm like, okay, okay, that's that's a long order being put on. That's a portfolio order. But why is it right now? Why are these things just happening right now? I don't understand. And also how I've talked about from Monday. Real retail stores sold from last week when they had the numbers, and then Monday people all of a sudden decide, well, actually, yes. And then the next day we get the idea of some of these companies that are on the consumer side. All of them start to move, right? And we're getting this sort of the entirety of all these ideas now just moving. And I'm looking at them this morning and I'm going, okay, yeah, I bet on these, but why are we all of a sudden just doing it? I think kind of spot on here. I don't know why, but I know how they do it. Come on, semis. Come on, semis. Come on. ESM looks fine. Looks like it's the start. All of these, though, look at this fucking move, right? Again, this, I'm tired of seeing it. Tired. This, been right on everything else so far. It's time to pick up the, and we doubled down on value. Dad fucking paid. We're waiting to see if we're gonna get paid on this idea. Done well on the communication side. That's just value anyway. Where does growth live in this? Like, where do some of these live in, like, clean energy and down in the dumps? Where does that live in a portfolio? How do you buy that? Where do you put emerging markets? China. Where do you put software companies? I think we have to buy this right here for Docu. Wait, what is that one? That's 189 or so. I mean, some of the we're we are definitely on the right side of the market, boys. Fuck me. That shit does not look great. Jesus. Oh, fuck. Trying to play so like God, I feel like you definitely a little lucky that looked at things the right way, but some of that shit is just like there's just full rotation out of some of the tech stuff. It's like, your price was based off of a time, a cycle. We're kind of getting into this. I have to think about it more. We're definitely in this little bit of this equity cycle, which has never happened really. But I mean, there's definitely you see it. These things are so contrary to each other. They're just complete opposites. Complete opposites. You get software companies getting pegged down like 40% in the last week. But the market's fucking rallying to all-time highs, and these value tickers are getting more and more flow. And the big boys that can acquire those, you know what's going to happen? And this is the kind of shitty part of capitalism is that those companies that are getting sold off so much that also can't buy back because they don't have enough money to buy back, they will be acquired by the mega caps. They will be acquired because their price will be so low. And you're getting some of this, and it seems very again. I don't think it's being really thought of like this, but think of some of these like not red, but when you look at some of these ideas, it's like there's so many points on some of these companies that you put a lot of points on because of COVID, right? These are going to be fucking acquired. People are going to buy this shit. Like, I'm not even I'm not even fucking sure. You can get some buys. I wonder for clean energy. I wonder if there's going to be a consolidation on some of that market if we look back. Here's what I want to mention because I think this is something to actually think about. We can buy on. If you think back over here, COVID happens. The energy sector, specifically like oil companies have been losing demand for fucking years, right? You're losing demand. People want to switch to renewables. COVID destroys you, right? You bounce back a little bit because we thought COVID was going to go away. Over here, Chevron and Exxon were, uh, I mean, as close as you can get to merging, right? As close as you can get to merging, and the whole energy sector, oil sector, consolidated. Basically, there was more mergers than ever. The all-time high in terms of mergers happened during COVID for the energy sector because the only way to survive was to again put your demand together. Otherwise, you're fucked. Like there's literally nothing you can do. So Exxon and Chevron were very close. Those are the big boys. They didn't end up doing it. But what happens is when your price is coming down so much, you're talking about a price to consolidate that's a lot cheaper than when you're at highs, right? To buy a company, obviously. It's a public company, anyone can go buy it, right? And so you acquire when it's in this sort of obvious state of influx and also when you have so many economic figures that are sort of supporting this idea. And so when we think of clean energy right now, who and what do you think is going to happen? Now, I've been talking about this with Chevron and Exxon because I think it's an important thing to think about. They have hundreds of billions of dollars as well sitting. They have cash. They got a lot of fucking cash. Just like all the big boys out there, they've got a lot of cash. What does Chevron and Exxon want to do? They want to exist. They want to exist. Now, their oil game is going to end eventually. It's still going strong right now. So what have they been doing recently? They've been trying to build infrastructure for clean energy, and the most easy way to do that is just to acquire companies with cash. What is going to happen when you've had this very large sort of swing because of COVID on clean energy, because we just sort of bought everything. As these start to come down and the valuations start to come down, what do you think is going to happen? These fuckers are going to get bought. And the government's going to let it happen. Why? Because these newer companies have technologies, but they don't have the way to manage it. And they don't have the money. They literally don't have the money to build the infrastructure for it. Guess who's got the money? Chevron, Exxon can go buy these, all of them. They'd still have $100 billion left over, and then they can spend that $100 billion to go fucking create the infrastructure to actually use the technology, right? And this is the way of the way things work, right? These companies can't buy back, so they can't support themselves. The big companies can, and that allows them to continue to exist and to then offer, obviously, capital. Do offerings to raise capital when need be, to basically acquire anybody, right? Sometimes they don't need to because they make enough revenue. Sometimes they don't have to. They don't have to, raise anything because they just keep buying back. And I think we're getting a lot of different things all at once here. Just starting to realize. Oh, God. Dow's at all-time highs. What a wild, wild time. I haven't seen much on the pharmaceutical side still, but still the most curious thing I'm interested in because, again, it's temporary, but the government is very close to. They're the one that paid for the whole thing anyway. And I was just talking about this yesterday, or the last few days, anyways, of how close are we to the US government just spending money to create like a new sort of pharmaceutical division? And it's sort of like when we look at these other countries that do it far better than us, right? The sort of the old mantra that communist nations actually produce the best healthcare, like Cuba. Cuba has the best fucking healthcare and all these different things. They have an actual government funding for that stuff. How close are we to, again, think of universal healthcare. That idea is very close. We're very close to getting universal healthcare. How close are we to government just funding this stuff and doing their own fucking thing? It's something to think about. That's where also you have the argument of, if there's universal healthcare, why do you need health insurance companies? What do you need these companies for if what's the insurance for? The government pays for it. But they're still going to exist. They actually still do exist. And we've proven that. I guess some of the scare would be for pharmaceuticals. the government literally pays for every single aspect of that anyway. So you just basically put them on the government. They become government subsidies, right? They literally become a part of the government, and there's a big difference between that, obviously. So I think there is some precedent there of we're already heading that way. Like we've already seen it. We've already seen that we're literally heading that way for healthcare. So this move just brings us closer to basically the government handles that whole thing. And I mean, to be honest with you, it's proven by other countries to be the best. Universal healthcare, first of all, obviously has shown to be best for the citizens. But if you've seen the countries that actually they own that industry, I think the best. I mean, Cuba is a great example, but I think the best example for the vaccine thing. How funny! How funny is it that Russia's vaccine is just as effective, and they made that shit fucking how many months before? Like 4, 5 months before? And everyone, of course, U.S. media was like, "No, fuck Russian vaccine. That's terrible. Obviously, it's not real." Guys, the Russian vaccine is just as effective as our best vaccine. It's just as effective, and they made that shit fucking months and months. And guess what? The most exported to the rest of the world vaccine is the fucking Russian vaccine. Guess what? Who's close to Asia and is trying to help Asia? Fucking Russian vaccine. But it's our fucking system that was like, no, the Russian vaccine's fucking obviously fake, and we can't. They're not even letting us go see it. As if, right? Completely as if Russia's economy is fucked. They would love to be able to sell their goddamn vaccine, right? As if they could. It's just ridiculous, right? And so Western media obviously affected some of that, and obviously Putin's a fucking ass, but and they do some pretty fucked up stuff, but it doesn't disprove the fact that a government funded sort of system there has always proven to be the best in terms of healthcare. I mean, as much as we want to talk about, I think again it's this Western media idea that communism and socialism is the same fucking thing. It's the socialist sort of uh, system that obviously allows for healthcare to prosper in such a way that people don't need to pay for it, and that it's quicker. There's no bureaucracy there. It's there's a fucking problem, we'll solve it. We have our best minds on it right now, and that's it. That shit took no time. Shit took no time at all. It's like such bullshit. Like, so I wonder how you'd have to think that this move here to remove temporarily the patents and everything, the IP, you're pretty close. You're pretty close. And I wonder how much. Again, when we were looking at this, some of the idea I had here of why this would continue, I think this is again a negative reaction for the right reason, like obviously, but this same reason of why this was trending up is the same similar thing. What if this just becomes a part of the U.S. government? It's getting U.S. funding all the time, right? That's literally what my idea was that something like Moderna here, this is what I talked about for a month, was that Moderna here would get U.S. funding year round, all the time, to continue trying to develop new vaccines and anything in case anything ever happened, right? You're on the fucking payroll. And that's what my whole idea here of why this would go past, because we already priced in all the revenue they would get from COVID vaccine, basically. We already know how much, so it's already priced. But if things were going to continue, which this looked like it was, then that would be because of a new big idea. And I've talked about this big idea of U.S. basically saying, fuck it, let's just, we're willing to spend money all the time. Let's fucking protect American lives and the global economy because that helps us, and make this a fucking part of the government, right? This IP thing is pretty fucking close. It's pretty close. I find it very interesting that we have so many things happening all at once here, but this is sort of how things work, I guess, right? Everything happens very quickly. I think everyone's still probably it's very raw in our minds that the government has spent more than ever in human history all at once. Everything together, we've spent more in the last year, little over a year now. We've spent more money in this last year and a couple months than we have in ever. One-shot Sputnik Light. Yeah. I mean, again, all of you know, I think most of you already here know, I'm bullish on Russian ideas. And I do find it unfortunate the continued, I mean, again, you shouldn't invade other countries and you shouldn't just take land because you want to. And you shouldn't kill your rivals. But that's one guy and his government. The people themselves, Russia's always had the smartest fucking people. Smartest scientists, at least. And crazy to me for us to act so strange. Like it's the people. People are protesting, they get killed. The government, not the people. Invest in the Russian people. And the US knows better than anybody because we fucking recruited every Nazi goddamn possible for our rocket program. So we didn't even care they were Nazis. We fucking recruited them anyway. What are we gonna sit around here and act like we don't like another nation's people? We are quite literally founded on a lot of bad ideas. So fucking strange. We live in a very weird world. We live in a completely globalized world, but we're still trying to act like we're all separated and doing different things and all this shit. Fucked up. I just can't wait till we're all the same. We're all the same color. Like if anyone's been to Singapore or just seen people from Singapore, everyone looks the fucking same. Caramel macchiato, mocha, right? You're all the mocha light, right? Everyone's got the same color, same look. Once we all look the same, then we're all gonna go, well, shit, and it's gonna happen. Everyone's gonna mingle eventually. Not that we don't need like culture should of course always be different cultures is great, but if we can't figure it out, look at just like this crisis is the best example. It's the best example, I think. Oh, now we'll help India. Here's our patents. It's it's fucking May of 2021. Mm-hmm. Okay. How many millions of people have died now? We're still talking about COVID. Okay, it's 2021. I'm really not so sure. I feel like I don't know. I just finally got my vaccine fucking 2 days ago. You're telling me the first vaccine was made almost a year ago and we couldn't figure that out? Okay. You got it. Just because you didn't want to have someone else's when they literally offered it to us? They quite literally offered it. They don't even have IPs. They just said, anybody want it? No, 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 no. I don't want no Russian vaccine. Yeah, as soon as everyone started dying, yeah, that helped. That really helped. It wasn't that not all of us were stuck inside and we didn't do anything and that wasn't enough of a culture shock. It was after everyone fucking died. And then we were like, oh fuck, man, that kind of sucks. Oh man, my whole neighborhood died, but I'm still not getting that fucking vaccine, I'll tell you. I'm obviously stronger. They're all dead. I'm alive still. What do I need the vaccine for? I didn't die. Everyone else did. Because I coughed on them. I watched this show. What is this show called? With the guy from Whiplash, the bald dude. There's this show of like it's based on the future, and he's got like a copy of himself. And there's like one of the futures is there was a global pandemic, and everyone has to wear masks now. It's on Amazon Prime. There's a very interesting show I watched a little while ago. See what it's called. But there's like one of the timelines is it's like this complete society that they just have never ending health problem like pandemics, and so it's just like most of the society got wiped out, and very very interesting show that I watched before COVID happened. See what it's called. Counterpart, that's what it was called. It's like a parallel universe, kind of showing the other one as like a global pandemic all the time fucking universe. But it was interesting to watch and be like, wow, imagine having to wear masks every day. And then we had the fucking pandemic. Counterpart with J.K. Simmons. That's my guy. It was a very good show. One of those weird shows that doesn't get any attention, but it's like a fucking awesome show. I have to rewatch that one now that COVID's happened. Obviously, there's a lot more of ideas in there besides that, but they basically are trying to stop this virus from ever spreading. Like, if we could go back, how would we stop COVID? I don't think we could even do it then. I don't think now we even have the ability to fucking figure it out. We're not gonna, guys, come on. We're not gonna copy the Chinese and tell everyone to stay inside. Could you imagine doing that to your citizens and telling them? Remember, back in like December of 2019, China was telling all their citizens to stay inside. They're oppressing their citizens. Can you believe they would do that? That's such oppression. And they had a bunch of people die, and then everyone stopped dying. But just because everyone stopped dying doesn't mean it's okay, right? We would never tell our citizens to stay inside and never go outside and to have to wear masks. Like, that's such oppression. Ridiculous. Couldn't imagine living in a society like that. And then you go to 4 months later. We're like, oh, fuck, I think we need to copy China. We might actually need to do it the Chinese way. Fuck. Goddamn communists. Fucking hate when the communists are right. But even then, we were like, nah. They're definitely all dying. They're definitely all dying by staying inside and not being near each other. They're definitely still all dying. They're definitely lying about the numbers. They're fucking for sure lying. There's no way that actually worked. Oh, fuck. I hate this world. It's so, I don't mean like hate, I just mean it's like, there's so much irony in everything we do through our fucking like view of the world. As soon as you go to somewhere else in the world, you realize how silly some of our ideas are of how we think we're better. I always find it so funny. We're like the youngest nation. We think we know better. We just have more fucking people. But hey, population's going down. Look at Japan. Japan's losing population as well. Was one of the global superpowers. See what happens. I think we're right on this idea so far. Makisa says spy, red to green. True. Makisa, I don't think you're in here. Everyone's buying dividends. They're selling bonds to buy dividend stocks. That's what's happening right now. Portfolios being shifted. No more bonds, no more 60-40. 60 stocks, 40 bonds. It's 100% equities, and you hedge through equities. You know what hedges growth? Value. You know what hedges value? Growth. And you know what's in between? Dividends. We're buying, well, we've already done that, right? So value already has the Dow, right? So the Dow, the reason why, so I had an epiphany. The Dow is the best example of this idea that these all have dividends, but you're going long. So the Dow is made up of every kind of company: industrials, tech companies, semiconductor, value companies, industrials, communications, retail stores. It's made up of everything, right? Value and growth, and they all have dividends. And so they all hedge each other. And with an economy that's going through inflation and never-ending government support, there's no risk of any of these basically going solvent, right? They're all going to exist. They're all going to continue to grow. And the Dow is basically the best example of everything. And that's why it's doing the fucking best, because everyone's going, you know what? I don't need 40% bonds, because those are going to go down in rates because of inflation. So what I buy today is not going to be worth that tomorrow. I can buy the equity market and have value and growth with dividends in between and make fucking everything I need. Low volatility in everything I need. And that's it. They're buying individual companies. That's it. And that's why this is doing the best. I'm already convinced now. We've already made the money on it. We continue. Continue trading this, and that's it. Don't need to do anything else. Take that to the interview, boys. Dow's at all-time highs. Look at that fucking candle. Every time I talk. Oh, goodness, goodness, goodness. Some Ethereum classic. I like it. I was reading some things. Everyone does think it's just a cheaper version of Ethereum. They're just buying the same thing, but I love it. They're like, holy shit, this is just a cheaper version of Ethereum. This is perfect. Buying in at the low. It's like if Doge 2.0 was released, we're like, holy shit, it's just a cheaper version of Doge with more memes. Doge 69. That's perfect. Guys, this is what's happening. I mean, this is just what's happening. So, I'm gonna remove some of the why it's important is I'm gonna remove some of the risk taking, I think, and I'm gonna continue. I already doubled down on this idea when the tech thing started to happen. I think now I'm really gonna start to take some of that risk and put it towards this and go on margin and start to take more margin and go further along. I think when you think of where we have not seen this idea has been happening and we've talked about it, but if this does continue and it goes further into this idea that portfolios are being switched, again, we're talking about trillions of dollars still of cash that needs to be switched. And the more money that gets taken out of the bond market, the more the equities appreciate because of it. So you get a double whammy there where money gets removed from bonds, equities go up, and then the money that was in the bonds actually then hits the equity market and then it goes up again. That kind of that kind of thing. You're talking about getting ahead of that even. So even though the shit's all-time high right now, I have no problem putting more money in here. So, I mean, we're already gaining so much from this. If we stick onto this schedule of buying 3-month options and then every time the expiration's coming up, transitioning them, right? You just keep transitioning and transitioning. It's just, you can remove every single time there's downside. You can remove the downside by transitions and keep buying. You don't need perfect timing. You don't need perfect timing. And so we use the technical understanding to transition, but we use the macro idea and understanding of this long-term perspective to always buy every dip. And so, again, we can sort of remove the negative, because think about it. If you looked at the equity market and removed the largest negative day of every year, right? Let's say the largest negative move was 5%. That's 5% you didn't lose on your portfolio, which could mean a significant difference even beyond that 5% that was lost. If you removed every single market crash, that number would be pretty different, wouldn't it? So if you can use the technical to remove as much of that downside as possible, which is our first priority always, we don't have to worry about upside. The upside's already there. Upside's going to be there. And I think everyone understands that. We're trying to use that understanding of, okay, when does that consolidation start and pull back so that we can time our options just a bit better. And the more we do so, the more you can make. And so in a moment like this is where, again, the best day to enter was yesterday. Best day to enter was yesterday. This, yeah, I don't need to say much. I don't need to say anymore. I'm gonna get fucking hammered for lunch. You're fucking wasted. Love myself. I love myself, boys. Love my job. Love making money. Pretty funny. Pretty funny. Again, the best part is being right. That's really it. That's why calling me humble is disrespectful. Honestly. The best part is being right. And I think this sort of thing is just oof. A lot. Definitely a lot. Definitely ahead of the curve here. Look at that fucking thing. Look at that thing. When did I start that spiel? When did I start the spiel? A little while ago. An hour and a half ago. Like 10 o'clock. Really makes you think, doesn't it? Really makes you think. Bask in it, boys. They're not even fucking close. They're not even fucking close. There's so, like trying to do the math of like how much money's actually out there. We know there's about $1 trillion of cash that's like investable like at any moment right now. There's about a 1 trillion in terms of funds that could invest, retail, just cash, right? Cash, active cash that is usually used to invest. And then we've got 20 trillion in the treasury market, which could actually just be liquidated very quickly. And it doesn't, again, the Fed will buy it. So you think of the Fed as a market maker with unlimited supply and demand. And so you could just, again, you could go sell $1 trillion of treasuries and the Fed will buy it. Like they actually will buy it. And there's actually have incentive to do so anyway, right now. And so you have this sort of ability to, and we've already been seeing it, and it doesn't really show itself. But I think with the 2-year, what I've seen, the 2-year spike, that's definitely obviously hinted at some of my idea here. You're getting the very sort of outsides of the treasury market liquidating faster, like the sort of the shitty sort of riskier parts of the treasury market are getting completely liquidated, going into equities for this sort of move. We've already seen some of the core stuff start to trend and come down, and yields have risen, and people are selling treasuries to enter the equity market. And so these things are sort of, that increases at an exponential, and that exponential is then increased even further for its result in the equity market. And so that's where you see things like the Dow. Think of when we did the nightly news play, when that first started. I talked about the idea of it. Value just trades on this very slow trend. I talked about this idea of getting momentum, and it turns into the momentum trade. Value turns into the momentum trade. The Dow is turning into the momentum trade, and that's where that exponential comes. It's now crossing into the equity market, and you're here, right? That's where that, you can see how those momentums continued even when we talked about it last year, right? And so again, you can continue this because we're traveling on a curve right now. We're just starting on the curve, okay? We're just, here's where we are, right? Here's the, wow, that's a terrible color. There you go. Okay, this curve over here, right? Here's where we are. We're looking at this curve. We started over here. Here's maybe like the normal value trend. We're just climbing right now, right? We're getting going on the exponential in terms of the flow coming in, and switching from 60-40. Like maybe if we use the average trend, it's right here. Here's like the average angle of the trend that we usually see in terms of inflow into the equity market. That's your 12% a year in S&P, from 60-40 and everything else. We're now climbing, right? And we're getting here. We're not even up here yet. This is maybe years away in terms of up here in terms of an exponential, but I don't think it's wrong. I mean, it's not wrong. But whether or not and how quickly, we're getting further into an exponential if you think about it. This is you go from one thing to another thing, and this is getting sharper and sharper. That means the sharper those trends get after every consolidation, the sharper the trend gets after every consolidation, the higher you're climbing up that exponential, right? In terms of how much you can gain and how much momentum is going to be there. And that's really a question of inflow and how much money. And that's a question of portfolio positions. 60-40 goes to 70-30 to 80-20. That's 10% more. That's 10% of all the money would be trillions of dollars, right? So trillions of dollars from that. So if the treasury market's 20%, or $20 trillion, sorry, and that's 40% of all investable income, or investable capital, let's say. And that goes from 20, right, to even 15. That's $5 trillion. You know what that does to the equity market? That goes quite a long way. So we've already seen the government spending factor. So we just continue. It's different this time, boys. That's going to be a nice quote. Just keeping the money there. I'm definitely happy I went long. I think I got a little lucky on that. You could definitely have no legs here. Transitioning here is an ass. Definitely ass. Hard to buy. You know what happens when your pension goes up in value? You spend more money. You can't touch your money in your 401ks and things like that, but if they're going up, 401k goes up, you go spend money because you just feel like you have more. Eventually, you'll get that money. Equity market keeps going up. The economy keeps going up in terms of consumer spending, which then directly causes equities to go up more. We're feedback looped out of our mind, boys. We're just completely fucking feedback looped out of our mind. Every time the market goes down, buybacks. Fiscal support. Economy goes down, fiscal stimulus. Equity market goes down, Fed buys more. It's never gonna fucking stop. Never. It's never gonna stop. It's gonna get easy. Turn the whole equity market into a token. You can only buy one thing. Remove everything, just comes one thing. That's what an index is. Good job, you figured it out. Oh my god, do we have to sit here and watch this thing explode? It's time for margaritas. With Margarita. And her margaritas. Anyone see the SpaceX launch yesterday? Finally didn't blow up. They've landed it a few times, but this time it didn't blow up. Time to go to Mars. Going to the moon. Yeah, I wonder. A question would be how high do yields go, the bond market? But I don't know if that. I don't know if I have the ability to answer that question. Hmm. The weather. Like the sun's coming up. 64. All right, I'm gonna go get some lunch. I'm gonna have some fun in the sun. I will see you guys this afternoon. This is looking to be quite the day so far. Whether, however much we get here on the growth side as it picks back up, we'll see. But obviously, there's a lot of buying coming in. These candles on the mega caps are showing this confidence boosting idea that we've seen. So definitely leading from today into tomorrow. Looks like you're getting a swing back up. That does a lot for the average. So when we do look at the NASDAQ being the most behind, it can catch up pretty quick here if those mega caps do get going. So that is where the rest of our risk is. Otherwise, you've heard me talk for the last fucking couple hours here about this idea of the dirty Dow and the idea of using equities to hedge equities and dividends and just buy value and use these ideas and trade through them and getting more and more money. It's definitely showing itself, and dirty Dow continues to trade all-time highs every day. This is so many points, just so many points up here. That's the breakout from this consolidation here. We'll see how far we go. When we check back in for close, we'll see how much is there. Enjoy your lunch, drink some water, get some exercise or something. I'll see you in a bit.